third largest crypto exchange, FTX, has had an incredible, spectacular collapse. What's happened? Well, it seems that Binance has signed a letter of intent subject to due diligence to buy the exchange. Expect them to be buying the assets and trying to avoid the liabilities. So let me explain what's happened and let me explain what's going on and why it's so important to the crypto industry. First of all, FTX has had incredible success. It seemed to come from nowhere. Of course, spent a fortune at the Super Bowl, as many crypto companies did. And then he said, why are you spending so much crazy money? Its success has been based on Sam Bankman-Fried, who has done well, has been standing up and said he was going to actually bail out the crypto industry. Of course, what he was actually doing was he was buying assets, but he was using a token, which is FTT, and the token produced by FTX, it's their token, was what it was being used to fund the purchases. He was purchasing assets. They call it a credit crunch. What's a credit crunch? Well, if you're buying assets that potentially have a long-term value, but short-term don't offer value. In other words, imagine you were buying some property, you bought the property, but if you needed the money urgently, you just couldn't sell it, or you'd get 50% of the price if you sold it. So in other words, he was obtaining assets that had potential future value, but if you had to sell them fast, you'd have issues. Had his own hedge fund. So what's happened is that he's had this gearing, if you like, gone in there, and of course it could have been a spectacular rise, except what's happened is that he's fallen out with Binance. The two started as friends. In fact, Binance owned a big chunk of FTX. They started as friends, but they became competitors. CZ, the owner of Binance, said that FTX had been going to regulators and saying damaging things. Therefore, CZ decided to sell or get rid of his tokens or get rid of what he owned in FTX. Okay, but more, announced it publicly. Okay, announced that they didn't have the assets to cover their liabilities short term. Of course, in the market where you have a situation where so much is based on trust, is there a rumor, and the rumor is true? Well, the tokens are worth whatever people are prepared to pay for them and potential future value. If all of a sudden there's no faith in those tokens, no faith in those assets, and that potentially the liabilities could be higher than what their assets are worth, then people sell. And of course, the more they sell, the more the token price goes down. So ultimately what you end up with, they call it a credit crunch, is that the price of the token wasn't worth anywhere near what the liabilities were. So in other words, they're actually in a situation whereby they couldn't raise the cash. Okay, what do you do? Okay, well, Sam Bankman-Fried has gone to CZ, has gone to Binance and said, will you bail us out? Evidently a deal was done, a letter of intent. Don't forget, that's not necessarily legally binding. I haven't seen the letter of intent, so I can't say, but normally a letter of intent means intent. In other words, we intend to do this, okay, but actually you don't have to go through with it once you do the due diligence or once you find out that potentially there's not as much there as you want. So right now it looks like Binance, the biggest exchange in the world, is gonna buy the third largest. Okay, that's massive, and of course would be good for the confidence of the crypto industry. But of course he can still back out. In other words, he's got all the cards, he can actually do a deal. So just think about it as JP Morgan buying Bear Stearns. Okay, what happened when that happened was that all of a sudden JP Morgan were in control because they could pay what they like. They could give them a very small amount because they had a credit crunch. So in other words, they couldn't raise the money. They're going to go broke unless someone bailed them out. Okay, the person then buying them out, if they're the only ones in the market prepared to do it, can actually pay next to nothing. What does that mean? Okay, well, we have to wait and see. And I'll keep you up to date on this channel what's happening. Okay, but right now what we're seeing in the crypto industry is, what are you buying? Okay, and how do you analyze it? Okay, in simple terms, if you look at something like Bitcoin, it's different. Okay, why is it different? It's got a limited amount. Okay, there's no debt. It's a computer adding or keeping score. If you look at tokens, tokens are based on the use of the tokens or the use of that network, or they're based on what you perceive the value of the token. In other words, what assets have they got? Simply looking at it like a company, can they just add more tokens as they wish to do so? So there's going to be this analysis of the crypto industry, look at where the real value is. And of course, that means that people that understand it, are prepared to learn about it, can actually pick up good assets less expensively. And then of course, as the confidence returns, as it will at some stage, then of course, those people will be making money. I'll keep you up to form, I'll keep you informed on what you should be doing, and indeed, what you should be looking at. Right now, Bitcoin has gone down, even though it actually isn't really affected by this. It's a different form. Okay, that for me is something that I'd look at purchasing. Okay, however, you've always got to diversify and you've always got to understand exactly what you're doing. Okay, if you check out this channel, okay, I'll do videos on exactly what each of these tokens are and exactly how you can invest. Hit like, please share the video, okay, and subscribe to my YouTube channel.